Okay, here we are. Welcome everyone. Happy all-time high. We are back at it again. Price ain't quitting. Up only. What's up, everyone? Good to have you here. Good to have you here. And also, of course, a very warm welcome to the newest Koens team member, being Odin, the guy here, the mod. He was a moderator, and of course he was a mod in Discord, but now he's official part of the Koens team. Met Odin in South Africa, and amazing guy, loves computers, technical stuff, has done, I think, technical education as well, Odin. I forgot the exact study. But very down-to-earth guy, very easy to talk to, very empathic, loves telling some of his stories in like what he experienced in his life, and yeah, incredible. I will definitely every time I come to South Africa, Odin, we gotta plan a nice little meeting together. But yeah, good to see Odin in the chat, and part of the newest part of the Koens team. He's been part of the community already for a very long time, answers many questions. If you are in Discord mainly, many questions have been answered by Odin, or he refers them to Jeroen or myself. And now, yeah, he upgraded to a team member. So welcome, everyone. Good to have you guys here. Reza, Hodl Crypto. Reza, thanks for all your comments as well. I read every single comment. Nowadays, Jeroen and I are both replying to comments, but I will always read all of the comments, at least, because I want to know what happens and if there's any feedback or any other scenarios people think about. So I always read everything. QZ World, welcome. Kurtish, what's up? Gwendy Zoo, Kali Family Man, Sam, how you doing? Good to have you here. Back from holiday now, right? Theo Kloppers, what's up? Welcome, man. Aman Gupta, Jay. Buckstone is Pierre. Welcome. I met Pierre when I moved to France during the road trip. Sur le pont l'Avion. I will never forget it. Oku, Mool, what's up? And indeed, congratulations to Odin. Okay, everyone. This is what we are going to do in today's live stream. So when price is moving into all-time highs, things are actually quite easy. I will share my Elliott Wave analysis on Bitcoin on the 4-hour time frame. We will shortly zoom out to the weekly in case you have not watched my recent update where I spoke about the weekly time frame. I will shortly cover the two scenarios that I keep in mind and the two 4-hour time frame Elliott Wave scenarios that I have. Of course, one bullish, one bearish. At the moment, there's no confirmation for the quote-unquote bearish one, which in the end is still bullish, but I'll explain it. So, Bina, how you doing? How is high time frame swing trading treating you, Bina? Yeah, I'm curious. Okay, that being said, let's start. And then after the analysis, we get into chatting, Q&A. I will tell a little bit about what I've been doing the past couple of days as my parents were here. And we did some cool stuff and maybe some recommendations I can give to you when you come to the south of France. So let's start with the... let's start with the weekly time frame first. No. So we're going to zoom out first, and then we're going to move into the 4-hour time frame. So cool. On the weekly time frame, as per the previous video, the probabilities were higher, right, to move up. Not a bearish scenario, still looking for a wave 5 to the upside, right? So this is currently still the primary. Yeah, we have a little push. I have seen some comments talking about the extended wave 5 where we get this small push to the upside and immediately the bias changes to very bullish, right? And this is something you do recognize in, I don't know if it's the same in Forex and commodities and stocks and other markets, but in crypto, the emotion swings heavily to either the one or the other side. When there's a little drop, everyone is very bearish. When there's a little pump, everyone gets very bullish, right? But instead, it generally is a good idea to just read the chart, not be extreme to either side and let the chart do the speaking. And at the moment, there's no reason yet to think about the extended fifth wave, where in that case, which is the other scenario, this one here, where you have a 1, 2, 1, 2, you need a very big wave 3 to the upside, right? This move to the upside has to be enormous Dutch. So enormous, right? And you also want to see volume increase. So once you move into a big wave 3 of an extended wave 5, you want volume to increase above the peaks that we had previously in the other two pumps, right, that we had here. So that is something we have to wait for. Now, volume, right, it might take some time. As you can see here inside the wave 3, the peak volume was towards the end of the move. So by no means does the volume need to enter in the middle or the beginning. This is more classic though, something you see over here, where the highest amount of volume is in this candle, which is in the middle, which is wave 3, right? So you have a couple of 1, 2s, then your wave 3, couple of 4, 5s, you end an impulse, you expect a retracement. That is classic, most common. Your wave 3 has the highest amount of volume, right? So that is something we want to see. Price moving up, volume increases significantly above these peaks, because in an extended wave 5, that is expected, right? The longest, strongest, highest volume wave would be the extended wave. Now, it has to be said as well that an extended 5 is not as common as an extended wave 3. So 1, 2, 3, 4, 5, extended wave 3 being the longest wave, the biggest one, is most common. An extended wave 5 is not as common, and the rarest impulse is an extended wave 1, which you don't see very often, right? Now, this is not one that we are dealing with. We're dealing with either one of those, but at the moment, just purely based on Elliott Wave probabilities, it makes more sense to initially think about a normal impulse with an extended wave 3, which is most common, and then a normal wave 5. Not an extended wave 5. Mind you that an extended wave 5 would go to much, much higher prices compared to a normal quote-unquote wave 5, right? And in this particular scenario here, the way I labeled it on my chart, I mean, in theory, a flat is still possible, but these dotted lines are probably soon going to be removed, but that's the end of then your 3, your 4, and inside 5, you would be looking for 1, 2, 3, 4, 5-wave structure, right? After wave 5, that is the moment you would look for a bear market. And the main difference with the extended wave 5 is that here you also have a 1, 2, 3, 4, 5, but then you expect another 4 and a 5, because the exact labeling is going to be like this, right? And then you're 4, and then you're 5, and there you go, right? And in general, because wave 5 is extended, you expect this to be the biggest move. So it has to be quite big. Why? Your wave 1 already moved from 49 to 110, 111K. And that's only wave 1. And wave 3 is not allowed to be the shortest wave. So if wave 3 is shorter than 1, then 5 has to be shorter than 3. But most commonly, wave 3 is the longest one, meaning longer than wave 1, which in theory would mean a bigger price gap, right, between the low of 2 and the high of 3 compared to what you had over here, 49 to 110, which means a lot more upside, right? A lot more upside in the extended wave 5 scenario, which is quite simply just not yet the primary, right? I'm keeping an eye on this at the moment. Now, alternatively, one might move a 3 here and wave 4 to the right and get a bigger range, but as mentioned in the video, it's not the highest probability Elliott Wave scenario. All right, so in other words, still looking for a wave 5. I do actually think it's good to at least cover the bearish scenario, just so that people have bullish and bearish scenarios. There we go. Bearish scenario is that this is the end of your 5-wave impulse, 1, 2, 3, 4, 5. And what is happening over here is part of a corrective structure, right? In that case, you have a wave A, you get a wave B, and a wave C to the downside. Okay, that's your bearish scenario. No? At the moment, not the highest probabilities, all right? And not the highest probabilities for reasons I'll explain now. First of all, if you're looking at this to be the end of a wave 5 over here and a bigger flat in a bearish scenario, then of course, let me label this in a bit more detail. You're looking for an A, B, and then a wave C to the downside, no? Now the common target for your wave B is taking out the previous all-time high, which price has done. Most commonly the blue box, 119.7, 126.5K. This zone, by the way, has nothing to do with the area in the thumbnail, even though it could be. And after B, you look for C down. Inside B, most commonly, you have a zigzag family structure. However, in this case, if we want to label an ABC here, your wave A, B, C, inside wave B, simple zigzag, your first structure, the first move, already took out the origin of this wave A, which is not common at all. Right? Preferably, if we think about a zigzag family structure in a wave B of a flat, you get a first leg up that doesn't take this high. You get a leg down, and then the next leg takes out the origin of your wave A. That is by far most common. That's something we see most of the time. So yeah, this is a scenario I keep in the back of my mind, but I don't have it on my chart. I do have the bearish scenario, but I haven't labeled this bearish yet. So we'll see. We'll see. Then on the 4-hour time frame, price moved to the upside. No market structure change, right? Price just kept making higher highs and higher lows. So there was no reason to think about the bearish flat scenarios, right? As mentioned in the video as well, there is no confirmation, no reason to think different as long as you don't get confirmation, which means a market structure change. So in this scenario, this is your bullish scenario. You have a finished 3-waver, followed up by a multi 1-2, get your wave 3, and then a couple of 4-5s. Now, if we look at the volume, then the highest amount of volume is in the recent move to the upside, which is preferably your wave 3. And then you get the ranges in 4s and 5s. Now, as here on my chart, we have a triple 1-2. We would like to see at least a triple of 4-5, which gets you a typical impulsive structure of a bit of a mess and a grind in the beginning, quick push, and then again, a bit of a grind eventually to end it. And after the impulse, look for a retracement to the downside, and then we will observe the retracement. Now, when looking for wave 4, this one over here, we can take a Fibonacci from the low of the 2 to the high that we have on the chart at the moment and toggle on the 0.618. Right, this one on my chart at 113.7K. The 0.618 is an invalidation for a wave 4. It is incredibly low probabilities for a wave 4 to go as deep as the 0.618. So in order to keep the impulse alive, we preferably do not touch 113.7K before at least making another high. But what we are looking for is a wave 4 that is quite similar in size compared to at least wave 2, if not longer, as most commonly the wave 4s are larger in size or equal compared to the wave 2s. Now, there is the guideline of alternation in Elliott waves, where if wave 2s are either shallow or long or short in time, right? It has to do with price and time. So commonly, a wave 2 would be deep and short in time, and then wave 4 tends to be sideways, shallow, and long in time, and generally complex. Wave 2 is often simple. If wave 2 is more sideways and shallow and complex, a wave 4 can be more simple, deep, and short in time. But generally, right, even when a wave 2 is more sideways, takes a little bit longer, wave 4 still has over a 50 or 60% chance, or look at the data of Swenel, it's in Discord, still has a very high chance of also being a sideways shallow structure. So generally, that's just something you're looking for. And commonly, wave 4 is at least similar in size compared to wave 2, if not longer. So therefore, we like to see a bit of a range, but not touch the 0.618. Weekend is coming up as well. The weekend is generally a ranging structure, right? So that doesn't mean we go sideways without creating another high. Of course, in the bullish scenario, you like to see a 4, then get a 5, 4, another 5, and you grind towards the upside. But keep an eye on the 618 that I have on my chart pulled from the low of this to the current high on the chart. And as long as price is not at least creating a bit of a range that is similar in size to what we have here, this 618 could be pulled from the low to wherever the high is going to be till the moment we actually get a larger sideways range. If you want to take things a little bit more safer, you can pull the 618 from this low here at 107 to wherever the high is. And then you basically go up one Elliott wave degree, because now you're looking at this wave 2 comparing against that wave 4. So you first need to get a more local 4 and 5. And after this wave 5 is finished, which is this one, we finish 3. And then we look for this wave 4. And that wave 4 should not touch this 618 taken from this low of 2 to that high, right? So you can also just follow up with this 618 from the low to this high, and then, just a newer high till the moment you get a range similar in size to what we had here, right? So this is what I'm looking for with regards to the bullish scenario. Then we get to the bearish scenario, lower probabilities at this moment. Let me go to an 8-hour chart here. The bearish scenario is a flat structure. So we have A, B, and then a wave C. The moment price touches the 1.618 at 120.5K, probabilities significantly decrease. But the reason the probabilities are lower is there's no reason to think yet that this is the highest probability. We don't have any confirmation of a flat. There's no market structure change. We have moved above the 1.38 here as well, right, at 117.2, which is interesting, right? So as long as there is not a 618 touch, right, as just explained, the 618 that we had, as long as you don't touch the 0.618, as long as there's no market structure change, it's difficult to give a flat the highest probabilities, right? Now, is this a great place to buy? In my opinion, it's not. What I would look for if I am not yet involved, and I'm pretty sure some people will not be involved yet, and they might FOMO in at the tippy top over here and are currently in a loss. What I would recommend is to wait for a range to form, right? Wait for a retracement, wait for a bit of a bigger range, wait for the weekend maybe, generally a range. And based on the range, you get information that you can use for new positions. It's very difficult to have a good risk to reward, high probability entry once price is pushing. You might FOMO in and then be lucky, but sometimes, right, we all know you enter on a high volume candle and price just does this and you're immediately underwater. What I always like to do is wait for a range to form. For example, if you missed any of the longs here in the range, right, you wait for the next range to form. Price here moved down to the daily naked point of control that we had. Great area of support. Probabilities were higher. This was a 5 waiver. We were always still looking for price to move up and not take out the low. Just got to wait a little bit for price to reach those areas of interest like the daily naked point of control, right? So therefore, I personally, if not involved, would wait for a range to form. Based on the new range, we get information that we can use. Which is also something I generally recommend in Elliott Waves, is once price starts pushing, just wait for the next range to form, as the range will give you all the information that you need in your trading and that I need in my analysis. As with this range, for example, over here, which was very nicely spot on, looking for the all-time highs. And yeah, just look at the thumbnails of the past couple of weeks, and the thumbnails basically tell the story of what I'm looking for. So just by checking the thumbnails, you generally get a bit of a good idea of what I keep an eye on. So at the moment, this scenario, not the highest probabilities, need to touch the 618, then change the structure, and then a flat might be interesting. At the moment, it's not yet interesting, and it's a bit of a death sentence to just randomly try to short for a flat while price is moving to the upside. It hasn't shown any signs of weakness, right? Okay, that being said, on the thumbnail, there is an area on my thumbnail that is called resistance between 120 and 126K. And that is this area over here. Now, there's a few reasons why this area might be interesting as an area of resistance. First of all, in the bullish scenario, where we are looking for an impulse to the upside, right? And we have the multi-1-2, and then eventually we look for multi-4-5s. Weekend is coming up, generally a range. once we move into the 4-5s, right, we get a bit of a grinding structure up. This area can provide us a nice, or could be a very nice area of resistance. And I'll show you in a second where this area comes from, because it's due to fibs. But if we move into 4s and 5s, we can move inside this area and then get a rejection as we finish a wave 5. In the flat scenario, right, by the way, important, the 1.618 is in this area. So if you touch this area, this flat, A, B, C, goes out the window. Now, as per the bearish scenario on the higher time frame, again, lower probabilities, but we have to cover everything. The common target, for a wave B is an overlap with the aware area. Interesting. And we have some fibs. So let me now get to the fibs. I got to zoom out here. So what you see on my chart here, I call it KRZ. It's something that I found years ago. I sometimes mention it in live streams. I found these fibs in the previous bull market. To be exact, I found it here when I had a couple of losses, and I analyzed my losses, and that's how I found this fib pool basically, and how to use it, and etc. And as you can see here, this is pulled from the previous range, or at least 2 ranges ago over here, right? It touched the pocket, the 1.38 to the 1.236, which is what you want to see, and then break out on the other side. And then you can very nicely see how every pocket has been incredibly well, here, this was the previous range, respected. The next one is between 123.3 and 125.8K. Aware, right? But this is one pull. The other one that I have is this one. This one requires log. And I zoom out. So this one is a bigger one, as you can see. I have it on in my chart already for a long time. Pulled over here at like the 23K range that we had. And since then, it has been incredibly well respected. I mean, the recent range, you can see here as well. All right. We moved above it, retest the area, look for the next one. Where's the next one? Between 119.9 and 122.9. So if I combine these two into one area, we get the aware area, 119.9 to 125.8K. And that is where the aware area comes from. So that is at least what I keep in mind, right? So it's just a bunch of fibs, because once you move into all-time highs, you don't really have any volume levels, right? All of my horizontal levels are to the downside. We have a local one here at 115, but of course we have nothing above price. So I use the KRZ method to get some areas of resistance, which generally are nicely respected. So that is why I have the aware area here above us, and it could line up nicely with the bullish scenario, ending with a couple of 4-5s, right? So that is what I'm looking for. Probabilities are highest for the bullish scenario till proven otherwise. On the 4-hour time frame, we have, or price, I always say we, but price has not shown any signs of weakness. The main sign of weakness would be to touch the 0.618 to invalidate a wave 4, taken from the low of 2 to the high of 3. We're looking for ranges to eventually start forming, weekend approaching, of course, also expecting ranges. The moment you do touch the 0.618, it invalidates a wave 4, and that is the moment that a potential local flat can increase in probabilities, right? Touch the 618, change market structure, get back in this range. One would expect this low to be taken most commonly. But at the moment, there's no reason to think this, because there's no clear signs of weakness, right? Price moving up, volume increasing, right? That's what we like to see in an impulse. And now you want to see corrective sideways ranges and price then moving up without touching the 0.618 Fibonacci, taken from the low of 2 to the high, right? We don't want to see that. If we do see it, that's not great for the bullish scenario, because it basically invalidates a wave 4. And then we have to recount the chart, and we'll get to new scenarios. So but at the moment, this is the way it is. On the weekly time frame, looking for a wave 5. On the 4-hour time frame, looking for this impulse to finish. Keep an eye on the ranges. I explained again, if you're not in a position and you feel FOMO and everyone is sharing maybe in other communities their P&L stuff, which we don't actually allow in our community because it is completely useless for anyone. It's only to boost someone's ego most of the time. If you're not involved, just be patient, wait for a range to form wherever it forms, and then, according to your plan, find an entry in that range, right? Something I also recommend doing, and I actually got a comment about this in Discord, is to remove price from your chart. So Striker, I still have to comment to Striker, but I did see the message. So Striker here replied to a message that I posted a while ago. Feel free to stop the live stream if you want to read this. And I gave a bit of feedback on psychology and trading and gave a couple of tips. One of the tips that I like to give is what Striker here replies to. Is he said, I want to say thank you. Reread your message a while about trading psychology and structure. Blah, blah, worked on those points. But one thing really stuck with me. Your advice to remove a price from the chart and just focus on structure, zones, and setups. That tip alone made a massive difference. At some point it clicked, and ever since, way more focused, less emotion, clear decision making, dollar amounts. My personal trading environment is not what you see here. This is my YouTube chart, so to speak, where I have the price, I have the time, right? But I have a chart that I run most of the day, which is my trading environment, where I do not have price on my chart. I don't have time on the chart because I don't need it. For my trading, I don't need to know the price. I don't need to know the date, the time, and that sort of stuff. And for most of you, it's the same. Most people do not need to know the price for their trading plan, or they don't need time for their trading plan. They just need to structure it, or volume, order flow, those type of things, but they might not need price and time. So I can really recommend, if you struggle with emotion, we're all-time high, 120 almost, blah, blah, blah. If you struggle with all of that stuff, just turn price off, leave it off for a month, and see how it impacts your trading. I am pretty sure it will help your trading. So yeah, if there's any questions, feel free to ask me. We're still going to be online for at least another half an hour. So this is what I wanted to say. Just to summarize, this scenario on my chart here has currently the highest probabilities. No reason to think differently. Multi 1, 2, 3, looking for a multi 4, 5. As long as price is not touching the 0.618, taken from the low of 2 to the high of your current wave 3 at 113.6K. Oh wait, this is the log chart at 113.7K, right? We're looking for wave 4s and 5s to the upside. If you do touch the 618, it invalidates wave 4, which increases probabilities for a more bearish scenario where we're looking for a flat structure, especially if you change the structure, get back inside this range, no bueno. But at the moment, with the information that we have, it just doesn't have the highest probabilities. First, we need to see weakness being touch the 618. Generally, you do get a bit of a bounce after touching a 618 and then change the structure. That increases probabilities for the flat. As long as we don't see this, we're going to look for upside, not downside. Okay. Yeah, I also showed the levels on my chart. So these are the areas of support to the downside. Area of resistance is above us, as explained with the KRZ fibs. And that is that, no? Happy trading. Okay, let me have a look. We started quite soon. So Elliott Wave Analysis started at what, 10 minutes or something? Yeah, we'll probably have a look at some alts as well. I see some alts coming by. Let me put this as a pin. Maybe a Band-Aid. Jason is a mod here. I met Jason in America, maybe a Band-Aid. And cheers for the silver again, man. Let's have a quick look if there's questions. Please talk about the wave 5 target as well. Yes, I think, Reza, you provided a comment on YouTube about a wave 5 target. So if we are looking for wave 5s on a weekly time frame, right? So what I like to do is, this is a high time frame wave 5. We're talking about a weekly time frame wave 5. And to me, what is more interesting is to calculate the target of a wave 5 based on the local structure, right? Wave 5 internally should have a 5-wave impulse. This is either on the daily time frame. I mean, you can even count it on a weekly, preferably, if you get it, right? A 5-wave impulse. And then on the 4-hour, and this is an internal 1, 2, 3, 4, and then a 5. And then inside subwave of the daily 5 waves is a 4-hour 5 waves. And then I can get a lot more accurate, right? Because wave 5s, they can still be pretty long, but you don't expect them to be longer than a wave 3. Now, if you want to calculate your wave 5 though, let me at least show you a couple of examples. So first of all, you can take a fib from the start to the end of 4, gives you an area between 119.7 and 138.7K. Wait, let me actually leave it on the chart. Then you can take a fib from the start of wave 1 to the end of wave 3 to the end of wave 4. Toggle on the 0.618. And you can see now as well why I don't really like to already think about the targets of a wave 5. So the 0.618, 250K, right? Maximum target there. Then you have the 1-to-1 taken from the start of 1, end of wave 4. Toggle on your 1-to-1 sitting at 121K. And basically your target area for your wave 5 is this whole box, which is from a trading perspective quite useless because it's so big. So therefore, I do prefer to keep an eye on the lower time frames, and then based on the waves on the lower time frame, I can calculate this area a lot more accurately because currently it's just really big, right? And it doesn't really provide us with a lot of information. So once we get some more information, we're looking for a wave 5, once an impulse is on its way and we can really confirm that stuff, then instead of this big area, we might get on a daily time frame, right? We can eventually minimize this area to something like this. And then at a later stage on a 4-hour to something like this. And then eventually something like this on a 1-hour time frame, and then on a 15-minute, etc. Right? So we can get a lot more accurate, just need to be a bit more patient. So the target area for your wave 5 is incredibly big. It doesn't really make sense at the moment to really check it. Yeah, we will definitely have a look at some alts. It can be interesting to have a look at some alts. ICP. Where is it? There it is. Yeah, I mean, ICP, I mean, nothing really changed. Yeah, we are at support on ICP. And a little bit of I prefer to look at ICP on the high time frame, right? So weekly, daily. So this is the support box here. Still have some support at 3.1, but yeah, not too shabby. This is quite messy. Maybe we need to have some sort of a flat. One high, took out the low. I don't know. With all the overlap, if you want to count this bullish, this is again like, oops, that was a wrong button. I wanted to press Ctrl-Z. I had a Windows moment, Ctrl-Z instead of Command-Z. I had a Windows machine before, but nowadays Control-Z is my end screen coming in, which I do every video. So I press Control-Z. Yeah, I mean, this has to be some sort of a diagonal, whatever. If you want to be bullish and then flat or a zigzag and then move up. We're still at support on the high time frame. ICP analysis was a high time frame analysis. It hasn't changed. Possibly locally here, of course, 1, 2, 3. You want to see a 4 and a 5, right? You don't want this to be a 3 and then price to take out the low. If you do take out the lows of this range, it's an invalidation of an impulse because you can still have a multi 1-2 on ICP, and then the invalidation is the lows of the previous range. So that is something I would keep an eye on. I wouldn't really care about everything that happened here, right? I would mainly just focus on, hey, this area here, right? This is the area of interest, so to speak. This high is what? 5068. This is 5067, a little bit lower. So yeah, either here, right? Impulse, ABC. If you take out the lows of this range, that's not great, right? You're not looking for an impulse up there. So nothing changed. And also high time frame analysis generally takes a long time before things really change. So, which is nice because we can patiently observe the chart and just wait, not be involved with the chart all the time. Liquid Mafia. Liquid Mafia is one of the, I always say this, it doesn't happen often. Liquid Mafia is here. So he's from Australia. One of the very, 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 very first Discord members. He was here at the very start of the YouTube channel and still popping in. He has an incredibly interesting way of analyzing the charts with fib circles. It looks like Interstellar. And interesting, same levels. So very compared to those levels, and is currently playing out. Okay, so 120 Liquid Mafia to 126, right? That's the area we're keeping an eye on here. Do you have one of your circles moving through that area? Right, so on the charts of Liquid Mafia, you see these type of circles, fib circles on the chart, and then you have the crossing points. These are generally support and resistance areas, right? I don't have experience, but I observed his charts. And if you move beyond a fib circle, then you're going to keep an eye on the next one. But hey, that's all I know really. He's Liquid Mafia. He's the boss. Could you please show how you pull the aware box? Yes. I didn't see. I saw the questions in between, but so the aware, right? The aware box here. I'll go to the weekly. So this box is taken with a 2 KRZ pools, which I call the fibs. It's a very cheesy name that I gave it, but this is just something I found in my journey as a trader. So the first one, I mean, you can basically see it, right? It's pulled from 70K to 53.5K, or actually the other way around. So from this low to this high, wick inside the pocket, okay? And this is on the linear chart, and then these are the ones that you can go to the settings. This is how it looks. All right, put that on your chart if you want to. And the other one is a log one, right? So you need to go to the logarithmic chart, and this one, right, is pulled from this low to that high, okay? Right? And then you get the fibs here to the upside if you put the settings correct. And of course, once price, like, you know, if it moves above the last one I have here, then I will just remove the lower ones and just keep adding to the upside. So far, very nicely respected, both of them. And that is the reason why I keep them on my chart. I generally only use it for the higher time frame, but it is possible to use it for local time frames as well. Let's actually have a look. I might be able to just pull one here. We just missed out on hitting the... I do want the pocket to be touched. This one over here. So once you have a range, eventually you get a range extreme. And I want that extreme to touch the pocket, basically. What do we have here? So you just got to look for a good pull. This one is too deep, in my opinion. Anyway, you get the idea. look for a range, and then find a good pool, and then observe the magic. But yeah, I found 2 good ones, so I don't really look for new ones. Are we probably in the final stage of this bull market? Yeah, probably. I mean, final stages can sometimes still be very explosive, right? So final stages does not mean there is no further upside, as clearly as per the previous range, the probabilities were higher to move up. Remember, like I during some previous live streams, especially the one from a couple of weeks ago. Oh no, it was a video that I made, which was 24 minutes long, where I only pretty much spoke about this thing, this move down. And I was like, guys, price was moving uppy and whatever. I said, this does not look like a motive wave structure, a diagonal, nor an impulse. It just looks incredibly corrective due to the overlap. Probability is higher to eventually take that high. And now that these probabilities played out, we just got to wait for a new range again. And if the range is corrective again, then we again look for price to move up. And that's just how we approach it range by range. As I mentioned in the analysis earlier, ranges give all the information. I love ranges because the ranges is where I am active. Once price starts pushing, I'm already involved. I get involved in the ranges. And you just got to wait for a range to show, right, with confidence if it's corrective or impulsive, and then choices can be made, trades can be taken. So with the alts, I'll generally just take a short peek. Can imagine many. Oops, that one. What do we have? Okay, this is Artificial Superintelligence Alliance. What a name. Yeah, the impulse to the upside is very tricky for the main reason of 1, 2, and 3, 4. So this is your bullish scenario. You can't really get a nice 1, 2. Where's the 4 and 5, right? Unless you get a expanding structure here, but expanding is rare till proven otherwise. So in a bullish scenario, it makes a lot more sense to observe what happens here. And why I have the 886 on my chart is if price can move up and touch the 886 at 1.81, you pretty much invalidate, but very low probabilities for a multi 1-2, 1-2, 1-2, 3. Right? Sure, you got to wait. And it's a big move to the upside, right, that you potentially miss, but it gives a lot of confidence. And generally, this doesn't happen. You would expect a bit of this, entry area, and then for price to move up. Let me have a look if a flat is still an option. Get rid of these fibs here. We got very, very close to the 1.618. So yeah, we didn't touch it, but I'm not really looking for a flat. So it makes more sense that in a bearish scenario, you're looking for an ABC to the downside here, right? An ABC can still morph into a bigger WXY or a double zigzag sideways WXY. But the main thing is you don't want it to become impulsive. Now, this doesn't count as a 1, 2, 3, 4, 5 because there's overlap, so an impulse doesn't work. Right? Multi 1-2, touch the 886, low probabilities, gotta wait for 1.8113 on the logarithmic chart. And for a diagonal, let me have a look. You want price. Let me have a look. So currently the invalidation for a contracting diagonal, which is the most common one, would be 1.0989. But in a couple of days, because weeks actually, so from the 4th of August onwards, this channel trend line taken from this low to this low to this high is going to be the invalidation for a diagonal. So in other words, for FET, right, every time you invalidate a bearish impulsive option, a motive wave option to the downside, being an impulse, 1, 2, 3, 4, 5, no, doesn't work, overlap. Diagonal, if you move above this line over here, doesn't work. Touch the 886, not looking. And that's all we have. So the moment you touch 1.81, you expect that high to be taken at a later stage. Might continue the range a little bit longer, that's fine, right? Gives more buying opportunities, but you look for that high to be taken. So more interested in the move down than the move up. The move up is not very clean. So sometimes it just requires a bit more patience. We can definitely count a 5 waver to the downside here. We have some nice support down here as well, the 618 with a point of control. But the only way to really go that low would be for this range to now continue if you think about a corrective structure. This looks like a finished 5. You know? So, no. FET. Awesome, donkey. Pleasure, Theo. Is what that is true, Nina. Do you think Bitcoin can mirror that? I know you don't trade news, but with rate cuts, extended 5 is surely possible. That's why it's one of the scenarios that I have in my on my chart on Bitcoin. All right, so it is possible to get extended 5s, and it is the reason I have it on my chart. It is indeed more common for commodities as per the previous video. So on the higher time frame, weekly time frame and higher, extended 5s increase in probabilities. For commodities specifically, Procter & Frost found, who are the authors of Elliott Wave Principle, the book on Elliott Waves, they found that in commodities, an extended 5th on a primary or higher degree, Elliott Wave degree, which generally represents a weekly time frame or higher, or at least daily or higher, happens often. Crypto is generally compared to the stock market, not the commodity market, right? In the data that is collected. And for those markets, an extended 5, and an extended 3 is the most common impulse. So that is why it's the primary till proven otherwise. And proven otherwise basically means we need a big surge of volume and then an extended move to the upside. So we will approach it range by range, right? If price moves up, we just look at every new range that is going to form. If corrective, we look for up and up and up and up. Till the moment at some point, it is not going to be corrective. And we get a impulsive move to the downside. And that is the moment we will go short and enjoy the bear market. ETH. What's up with Ethereum? ETH. There we go. Okay, ETH. So on Ethereum, I made an ETH video. It's already a while ago now, no? When's the last one? 1 month ago. Yeah, not bad, not bad. So still relevant what's mentioned in this video here. And yeah, ETH has been very nice, not gonna lie. So why price might be bottoming here is a couple of months ago now. It bottomed on our support box here, which is great, and it's been moving up. So yeah, not bad. Now with regards to Ethereum, let me clean up. This looks like a 3 wave to the downside. So there is of course, more bullish would be that you have this going on. Yeah, this is, so, okay, yeah, it's actually quite easy. Your bullish scenario here is this. Why? Because this is a 1 or A, that's your 2B, and you look for a 3 or C. Meaning, of course, an impulse, right? 1, 2, 1, 2, maybe a triple 1, 2 over here, but 1, 2, 1, 2, 3, 4, 5, 4, 5. Are we approaching resistance? First of all, the weekly naked point of control. Otherwise, this one already has been touched here, acted as resistance. That one is next. Monthly naked point. Okay, some levels above. So, cool. Now, timing-wise, your move down is very short. Wave 2s can be very short. Zigzag family structures in the wave 2s are common, right? Can be definitely short in time. but you preferably end after the 0.382. It's a 382 retracement, minimum target for a wave 2. So there's definitely potential that you have a 1 or A, 2 B at this low, and 1, 2, 1, 2, 3, 4, 5, 4, 5, create another wave 1 or a wave C. Right? So you can have a 1, 2, 1, 2, 3, or you get A, B, C, and you get a deeper retracement. More bullish. I'll argue, yeah, which one is, both are bullish, I suppose. ABC would be bearish. But you can still count things like this as well. Aware. Right? 1, 2, 1, 2, because this wave 4 would be shorter than this wave 2. So 1, 2, 1, 2, 3, 4, 5, 4. And now work on your final wave 5. Finish 1 or A, reject to the downside. Should be a corrective move, right? And then continue. So you can see there is overlap between the expected price action, between the two scenarios I just explained. If you're looking for a wave 5, you want to finish an impulse, right? And then you're looking for a retracement. If that is the end of 1 or A, you're looking for 2B and then another leg up. But you're going to be looking for a retracement. And the retracement preferably retraces to at least a 382, right? Wherever the high is going to be. We know the fibs, the fib levels. So that is according to what we look for in this scenario. While the other one, if I just Control Z, makes life easier. So here, finished 1A, finished 2B, question mark, right? We're looking for eventually a wave 3 or a wave C. Now, based on the price action, volume, a little bit of a surge, but 1, 2, 1, 2, 3, 4, 5, 4, 5, finish an impulse, look for a bit of a retracement. This one would be more shallow because now, in a bullish scenario, this is another one. You're looking for another 2. Invalidation is this low. Bearish scenario, this is a wave C, you get a deeper retracement. But as you can see between what I show here on my chart and what I just covered, where you're looking for a 5 here and then a retracement, it's similar price action. You're basically waiting for the impulse to end, right? And then after it ends, you look for a retracement, but then depending on the retracement, you get more information. ABC up, is this higher 5? Is this another wave 1? No. Now on Ethereum, however, on the higher time frame, if we go to the weekly, we were keeping an eye on a WXY, which is this one. And after wave Y, one would expect price to move up and eventually take out the all-time high. Your quote-unquote bearish option is what I have here on my chart. So a continuation of the range, but you would preferably still expect this high to be taken at 4.1K minimum, or at least first before anything else. Minimum target would be reaching the 0.9. Where is that one? 0.9 is 3.8. Right. Now the triangle would just continue the range A, B, C, D, E, right? But it all matches with what I showed locally. So this is what I'm looking for. Now with regards to resistance, let me just open all the levels. These are all high time frame levels. I don't really deal with lower time frame stuff. So weekly naked point of control, just above price here. Then a monthly naked point of control. Another weekly naked point of control. Those are my preferred areas of resistance, are the volume levels. So these are the ones I keep an eye on. Let me check what a volume profile does here. Okay, we're above the value area high now. Up. I'll pull a few just to see. From the low. Then we basically have this range here. Okay. So you can isolate this range, basically. This by itself. You have the mess going on here, then price moved up, then we started ranging here. You can quite easily see we had a support resistance flip, creating a lower area and a higher area, right? And then here price broke shortly below it. So therefore we can pull a volume profile of the higher area And the value area high is in overlap with the monthly naked point of control. This point of control was a big area of resistance here. Price moved back down to the value area low. Actually, this is a very nice volume profile. So value area low acted as support. Price moves up. One would generally expect, according to value area trading, right? The volume profile trading strats. Once you move beyond the point of control, you would expect the value area high to be touched, which is at the monthly point of control at 3.3K. So that would be definitely an area of interest. And if we would look for a local impulse on the 4-hour time frame as explained, having that 1, 2, 1, 2, 3, 4, 5, 4, 5s, get a bit of a grind up to the monthly naked point of control, then reject there, get the retracement. Depending on this, we'll see what happens next. We've got to wait for that retracement. But we have a lot of time. We're on a weekly chart and daily chart, so it will take a while. I'm actually going to keep the volume profile on my chart here. So there you go, Ethereum. 07. What are the probability of bull market ending in your aware area? Well, the aware area is now, or price leading up to the aware area, has a 3-wave structure to it, right? And a bull market ending with an impulse should have a 5-wave structure. So if this turns into a 3 and price would decline, we get to the bearish weekly scenario that I explained. It's not the highest probability, we do have it, where this is the end of your bull market officially, right? So the bull market is already ended, basically. Even though you create another higher high here, this higher high is a wave B. And then you get a wave is C to the downside, and that is a flat, A, B, C. Now, a flat can then be part of a bigger corrective structure, right? And you just range for a very long period of time, or it's finished and you continue. But that is your bearish scenario. But a bull market, if you talk about what's the chance of the bull market finishing at the aware area here, which is this box on my chart, right? There it is. Low, because we want a 5-wave structure to finish. So if the bull market is not yet finished, ending here, currently unlikely. Because we need a 5-wave to finish it. And currently, this is not a 5. It's a 3. How do you use FIB targets when in price discovery? I mean, you can use wave 3 targets, wave 5 targets, right? So when you're in price discovery, so how can I... it depends on what you're looking for, right? So, okay, here we go. If we have an impulse to the upside, right? Classic impulse where you have your wave 3 as the extended wave, right? And imagine that this is your all-time high, okay? This is your previous all-time high. The old one. And then you get a dip, which is corrective, right? We might mimic what's happening here. Who knows? Right? We get a corrective structure, and then price moves up and takes out the all-time high, right? Now, the moment it does, if you are looking for a 5-wave impulse to the upside, where most commonly wave 3 is the longest wave, you would expect a wave 3 to reach at least the 1.618 as a usually minimum target. Okay? Now, wave 3 can easily extend to higher prices, higher FIB targets, 2, 2.618, 3, 3.618, 4, 4.618. But generally for a wave 3, the maximum, as is written in the book, is 4.236, if I'm not mistaken. But I just, keep counting up. So those would be areas of interest, or at least targets. And you also will see that if you're looking for wave 3s often show a reaction at the 618s. Right? Those are the main areas for wave 3s. So then we have wave 3, which is your price discovery. Eventually, price starts ranging again, and then you need to look for a wave 5. What's your target for a wave 5, right? Because you don't know, because now the all-time high is here, and you only know, okay, we're still looking for a wave 5 because this move up, it's too long for a wave C, low probabilities, higher probabilities, we're looking for 1, 2, 3, 4, 5. Wait for 4 to finish, but what's the target for 5? Well, there's a few ways to get to the target of 5. First of all, take a Fibonacci retracement. Let me actually put the numbers on the chart for clarity's sake. First of all, take a Fibonacci from the start to the end of wave 4. And then toggle on the 1.618 and the 1.236. Mind you, wave 4 generally retraces to at least the 0.236. I'm not sure if I drew it very accurately. I didn't because it's super shallow. So usually, of course, wave 4 goes a bit deeper. Right? Oops, wrong button. And then you take it to wherever the low of wave 4 is. But these fibs, the 1.618 and the 1.236, creates an area of interest. Then you take a trend-based fib extension from the start of wave 1 to the end of wave 3 to the end of wherever wave 4 ends. Toggle on the 0.618. I also have the 382, but toggle on the 0.618. Right, there you go. And then you take another trend-based fib extension from the start of 1, end of 4, toggle on the 1 to 1. These fibs all together give you an area of interest for a wave 5. Now you can also use channels to estimate the area of wave 5, but I personally prefer horizontals over the channels, as the channels are diagonal lines basically, and I prefer the horizontal lines which I get with the fibs. So this is how you get to wave 5 targets in price discovery. Now price discovery might also be a flat. If you finish a 5 waver and you get a 3 wave A, and then you get a B, many people will be mistaken for a continuation of the bull market here. Because we have a corrective move down. Okay, probability is higher to take the high, right? But then this next move up, if we want to see a continuation, has to be a 5 wave structure. But it turns into a 3, which then means that this high, that's a B, right? Also, there's a few other things that play an important role, like the time of a wave 4. If all of this would be 4 against a short wave 2, wave 4 is likely going to be too big, right? If all of this is a wave 4, likely your wave 5 or your B, this has to be an A, B, and then a C. C is a 3 waver, not 5. B is likely too high, etc. There's other things we look at, but let's keep it quote unquote simple, where price discovery, if you look for a wave B, is taking a fib from the start to the end of A, right? And then this is also a target in price discovery, but then for the high of a B, after which you look for C down, right? So yeah, and then, I mean, price discovery can also be a zigzag, and but yeah, you need to know basically the individual targets of Elliott Wave structures, and then price discovery is just another term that people love to use. Because in Elliott Waves, it doesn't actually matter where price is. You can remove price from your chart. You can remove time from your chart. You don't need it. So previously, we were in price discovery with this move, remember? But here, even without counting, I explained this move in the simplest way to, where is it, educational, Elliott Waves Beginner's Guide. Check out this first video in the Beginner's Guide on my channel. The simplest way to use Elliott Waves without even counting, right, this is a perfect example where you have a couple of 1-2s, but if you don't know Elliott Waves, you have just a grinding structure, as I call it in the video. Then you get your quick move up, preferably on an increased amount of volume, and then you get a grinding structure again with overlap and prices slowing down and prices starting to range. And the moment you see this, you're looking at an impulse, and then after the grinding structure, you look for price to reverse to the other side. So even without using targets and detailed Elliott Wave analysis, the moment you see this, you got to be aware that an impulse might be ending, and we look for a bigger retracement, which preferably goes to at least the 0.382 Fibonacci, which generally is a minimum retracement target. More is shared on how to use and apply this with many examples in this video, but it's a really good video, if I say so myself. If you don't really, if you're a bit scared of Elliott waves with all the rules, the guidelines, and everything that comes with it, I can really recommend that video. Yo, Jeroen, how are you doing? Base channel on ETH indicates the scenario where wave 1 is already in and we're working on a wave 3. Okay, yeah, that's nice. Maybe a double 1, 2, and then get to 3 later. Hey, Veronica, how you doing? It's been a while. KRZ is good, yeah. Just checking the recent messages here. You should clip that fib and make a short or something. I mean, so Lachlan, the editor for the shorts, he skims through the live streams, and then whenever I answer questions from you guys, then he cuts the question and the answer into a short. So maybe it can become a short. Yes, Odin is indeed a moderator. What point did you position in the range and why? Apologies if this is too personal. Feel free to skip the question. No, it's fine. So in the previous range, so my trading approach is it's actually a little bit explained in this video, the simplest way to use and trade Elliott waves, right? And in this video, in the first few minutes, I explained that the foundation of my trading is this video, right? It's this video. So the moment probabilities were higher that this range was corrective, not impulsive, meaning looking for this high, that is the moment I either look for entries or I enter. But generally, I like to wait for price to touch areas of support. And the areas of support are my horizontal levels. So as price was ranging here, I made that long video about this structure. I said, guys, I don't see a way that this is a high probability motive wave structure, which increases probabilities. This is corrective, right? Even when price here, when we had overlap, that's where it started. Therefore, and if you go back to my video that I made around this time, I also had a scenario where this was a W, you look for an X and then eventually a Y. That was one of the two options that we had. But I wasn't looking at motive wave stuff. So the moment the range is higher probability corrective, I will enter at support areas in the range with then my stop, of course, further away, just in case it dips deeper, right? I still want to be safe. Having a corrective range doesn't mean you can get a little bit of a deeper retracement, right? Price also took out the low here. So you got to be safe with your management. But that is how I then approach my trading. Now here we had the high of the weekly gap. So we had on a weekly time frame, we had a gap here, and the high of the gap acted as support over here, right? I actually didn't have any support here, but yeah, I enter at areas of support inside the range, and then I wait and I wait and I wait for more information, and then so yeah. And if a move to the downside would be motive, then I would like to see, or then I'm gonna try to short areas of resistance, but it has to be motive. So the only thing really you need to be able to identify if you want to trade Elliott waves is a range corrective or potentially motive. If there's a potential for it to be motive, just be patient and wait, maybe miss out. Probability is higher, it's corrective, try to find entries. If you do get a motive wave, either down or up, and then you wait for the range after to wait for the correction, and then trade the continuation. So I see a bit of yeah, with regards to the compendium, actually, I was really busy setting up the business here and terms and conditions with the lawyer, only for me to figure out that I actually don't need it to publish the compendium because Amazon has its own terms and conditions. I already have a business, just not in France, but I have one. So now I can just focus on finishing the compendium instead of finishing or focusing on all of the administrative stuff. But I figured that out recently. So, yeah. We're working on it. We're working on it. We're in the final stages, like final stages. I was a member in the server about 5 months, and about a month ago, somehow I was dropped off it. Since then, I can't join again. Maybe Discord tagged your name. It happened once or twice before, where a normal member, sometimes you have scammers that join under the name of a normal person, normal member. But then if that scammer gets detected by Discord, everyone with a similar name gets booted. So maybe, I mean, that's something that comes to mind. Doesn't happen often though. But yeah, Dion, I would recommend to send your username, send it to Odin, your Discord username, either here or somewhere else. And then Odin, we might want to check in the ban list if the username of Dion is there. So, yep, j'habite en France. Jasmine, I see Jasmine. I saw a couple of others, of course, but not always easy to go through everything. So Jasmine found support. Whoops. On the monthly. Let me check. Bull. I mean, yeah, this, I mean, it looks from, this is of course the low. It looks like a pretty solid impulse. Okay. Not sure if we can get a very clear impulse to the downside here. It might look better as a zigzag family structure, because if you're looking for an impulse, you want to see a gap. So you want to have a section where there's no overlap. Here, if you would drag from lows and to the right, there's overlap all the time. Even here. Yeah, even there. So might be looking for a zigzag family structure there, which would be bullish. Price moved into support resistance area here on the chart. Not very, very clear SR. Mm-hmm. One, two, three, four, five, ABC. Alternatively, 1, 2, 1, 2, 3, 4, 5, 4, 5. But then the fours get too big, so might prefer counting some sort of a flat here. Locally, though, and this is what's currently most interesting on Jasmine, is just to keep an eye on what's happening here. Right, we have a sharp move up, corrective sideways, slow move to the downside, and now we have acceleration again. So in an impulse, again, 1, 2, 3, right? And then you look for 4, 5, or 1, 2, 1, 2, and then 3 after. You just don't want to change market structure. Not allowed to move below that range. But yeah, on a high time frame, can count an impulse to the upside. I'm not actually, yeah, the low was made on the support resistance area here, so yeah. Has potential, no? Highest amount of volume in wave 3. It's been a while since we looked at Jasmine. I do think the SR areas are still accurate. Monthly here respected, acted as support. Resistance on my chart here is a little bit higher. Another 12, 13%. Yeah, you can definitely, at least on the daily, count an impulse down here. So the danger is that this, or the danger, still becomes a bigger 3. Alternatively, over here, yeah, flat ABC. But I think it's over twice the length. Yeah, I don't like it. I don't like a flat. I don't like a flat because it's over twice. C is over twice the length of A plus B. You don't really want to see that. Unless you have ABC or ABC. But yeah, keep an eye on the local structures. I just don't want to change market structure at the moment. And on the very high time frame on the weekly, yeah, we can count an impulse up. This move down has a lot of overlap. So zigzag family structure is definitely an option in that move to the downside, which would be bullish. I don't really want to get into diagonals here. And all the overlap is not it's not what you want to see in an impulse. So yeah. SUI. Yeah, I think SUI hasn't changed with the previous analysis, but here we have quite a clear 5 wave up. So I actually just look for this high to be taken on SUI, really. We have a messy move to the downside, very clear 5 wave move to the upside, followed by what looks to be a 3 wave structure. And we almost, maybe we already did on the lower time frames, not sure, but almost took out this high. Looks very 3 wavy. So SUI, looking for that high to be taken. Probably all-time highs again at some point. What do I have here? Confluences. High time frame confluences. Approaching some resistance. Bull. Well, we can see it's been a while. I haven't updated this for a little while, but 5 wave up, retrace to wave 4 or wave 2 of a lower degree, which basically means that range or that range. Those are your primary areas of support. And then it would be nice if that's the end of a wave 2. Let's see. Yeah. Yeah, wave 2 about the same size as a wave 1. Would be neat. This is, of course, bullish. Alternatively, bearish ABC. Likely C moves above all-time high, though, for a flat or something. But yeah. And here as well, you just don't want to change structure, right? Maintain structure, higher highs, higher lows. Don't move below the previous range. If we count this as an ABC, if that's possible in a lower time frame, you can, of course, still have a larger corrective structure that you're dealing with, but you would still expect this high to be taken before that low. So that would be something to look for. Unless this is wave C of a flat, that's your bearish scenario. But yeah, not really wave C of a flat. Move way beyond the common target. Less common is the 2.618. It's just probabilities, no? No, this doesn't make sense. Also touch the 1.618. So the only flat one could really consider would be counting this as A, B, and this is your C. And then your wave C is very long. Almost a 2.618. Not a common target. So preferably it's a 1 or an A. Are we bullish like March? I don't generally compare too much with previous bull markets because every bull market is different. But March 2020. No, not at the moment. You're thinking about us being here and all of this yet to come. I mean, maybe in hindsight, but at the moment, that is not the highest probability scenario. Here, we were looking for a wave 1, wave 2, wave 3, wave 4, wave 5. Nice impulsive structure. So here, you're looking for wave 3 to form. At the moment, that is not a consideration in the current bullish environment that we have. An extended wave 5 might, of course, still be very long. 1, 2, 1, 2. You look for a big wave 3, 4, 5, 4, 5, right? And you might mimic this move with what you had here, but then you don't get another 4, 5, right? After here, you're finished, basically. But at the moment, looking for the extended wave 5, just according to Elliott Wave probabilities, is a secondary count, with a normal wave 5 being the primary, but they have the same direction. They're both looking for price to still move up. And then just depending on the price action, the extension, the volume, we will know more. Extended wave 5, you need the highest volume in your 5. That's what you want to see. What about a parabolic increase after the halving? I don't really do things with cycles and the halving and those type of things. I believe this cycle already, if I'm not mistaken, is different compared to previous ones because we made We made a new all-time high before the halving, and usually it was after the halving and that sort of stuff. I personally, that for me, that falls under like fundamental stuff, like halving and those type of news things with regards to price action, which is not something that I use in my trading. So it's difficult for me to provide you with a answer that you're looking for. If you talk about parabolic increase after the halving, I just look at the chart and we're still looking for price to move up. So yeah, is it going to be parabolic? Maybe an extended wave 5? Yeah, we have it on the chart. We're prepared if it comes. Would be nice, right? Price moving up to much higher. But then we want to see volume increase, preferably volume being higher than the volume we had in the previous two moves. And create a 1, 2, 1, 2, maybe another 1, 2, and then you eventually just want to get your very big wave 3 in a more parabolic environment to get a blow off top, right? That's what you're looking for. And in this particular case, you look for 1, 2, maybe 1, 2, 3, 4, 5, 4, 5, finish your 5, and then retrace. So, companion might turn out to be the indicators BTC top is in. Relax, bro. Yeah, nice one. Yeah, it's the news that's gonna change the market. Oh wait, I saw Tau. I see Link as well. Yeah, I don't have. I don't think I have Tau in my folder, but I do have it here. Do I? Oh, I do. Here it is. Wait, why is this a different chart? More info? Well, anyway, I guess this is the most interesting part anyway. 1, 2, 3, 4, 5. Well, we can count an impulse to the upside. Do I have something? Yes, I do. Okay, there we go. It has been a while. Let me remove the levels. Minimum target 382, of course, touched, as the 05 is touched. The 886 is on my chart because of a multi 1-2, I'm sure. 1-2, 1-2. If you touch the 886, you're not looking for a multi 1-2 to the downside. And then, of course, things become very three-wavy, especially if you take out 4-4-4. which is bullish, as then you're going to be looking for the high. Impulse down, 1, 2, 3, 4, 5. Of course, overlap, so that doesn't work. For a diagonal, it's now already expanding. By now, yeah, that doesn't make sense. And then if you move to the 421 fib here, the 886 taken from there to there, probabilities are higher that whatever is forming here is corrective. You're looking for the high to be taken at some point. With regards to support, I'm actually not sure if I had anything where price found support, to be honest. I don't know. Generally, of course, you look for support in the range 4 or 2 of a lower degree. We got close to 2, just missed out. A zigzag, if so, on the lower time frames, can of course morph into a larger corrective structure. So that is your bearish alternative, is that you're not yet finished, right? After an 886 touch, it doesn't mean you just do this, right? It's just probabilities are higher. You're going to be looking for price to take out this high instead of the low. And whatever happens in the range happens. So we have areas of support and areas of resistance, 886 in confluence with a point of control. But no, I mean, so far so good. Of course, this move up has to be impulsive. Currently, it's a 3-wave structure, not a 5. Could that be a triangle? If it's a triangle, by the way, it's bearish. Or it's a few 1-2s. A higher low. That's a higher low. I mean, yeah, bearish is counting a triangle here, but I'm not gonna move into WXY. I can also get a WXY in there, so it doesn't really matter. At the moment on a tau, we have a volume. Yeah. Just gotta wait for a new range to form, no? Would be nice to go a little bit higher. Value area high at 430, point of control at 423. I mean, this area here would be a next area of resistance. So, yeah. But no, I mean, so far it looks good. And if you take out the 886, probability is higher, move down is corrective. You're going to be looking for the high at some point. Bitcoin moving. Yeah, I mean, we covered Bitcoin, of course, yesterday as well. And moved up. Cheers, Benji. At the moment, it would be nice if Tau can move up to like 420, 430. Observe the reaction at resistance. Currently, it's moving up impulsively. So, Benji, what you want to wait for generally, of course, is for the impulsive moves to slow down and create a bit of a grinding structure, right? So, currently, you're having this, right? And price is moving up. But in this local, even in the local move to the upside, you eventually want price to slow down a little bit, right? So, price action curves. Currently, it's curving like this, and eventually you want it to curve a bit like this, right? And then you have your impulse. So locally, you have this in the beginning, price moves up. You want to eventually get a bit of like that. No? Would be nice if this happens against resistance or getting close to resistance. So you of course, you have to move up, and then you get a retracement, and then you get into 4.5s. You touch the 430 area, might lead to possibly a retracement, maybe another 1-2. Bearish would be ABC. Well, Bitcoin moving. Ruben van Eyck. Good to have you here. Look at XRP. I think XRP... Wait, let me change this here. Hello? There we go. Cool, now we're good again. XRP is moving. Very nice. Yeah, so my XRP analysis was, oh, that's not this one. There we go. Yeah, so about a month ago, in the end, the conclusion of the video is not yet finished, right? Short version. Still looking for the high to be taken, which I believe is the all-time high, no? Yes. So instead of counting everything in great detail, it's just higher probability it's corrective. But I do have some stuff on my chart from previously, so can at least have a look at it, I suppose. This is a continuation of the range. This is continuation. This was triangle. Oh yeah, this is now invalidated, which is good. That's positive for the bulls. Impulse never worked. Lower probabilities. And then say with Bitcoin, alternatively, this is just a finished structure, probably WXY. And then 1, 2, 1, 2, 1, 2, 1, 2, whatever, 3, 4, 5, 4, 5, 4, 5s. Eventually end this. That's going to be your 1. Look for a wave 2. And then up you go, wave 3, take out the high. It would be preferred if 1 does not take out the all-time high. Or you just swipe it, grab the liquidity, and drag it down in a 2. Those are like the 2 options. I wouldn't really like price to just do this and this and this and not actually get the retracement. So, yeah. So the triangle, of course, doesn't work. Price moved above WXY. This is your bearish option, continuation of the range. What's this one? No, I mean, this one is unlikely. B has to be a 3-wave structure. At the moment, it looks impulsive, not a 3-waver. What is it here? Yeah. So, of course, just most bullish is finished. WXY. 1, 2, 1, 2, 1, 2, 3. Or get a double 1, 2, 1, 2, 1, 2, and then 3. Would be even more bullish. Just waiting for this impulse to finish. The moment you see things like this, it's most interesting to look at the local time frame. So we do have resistance to the upside. Quite a lot going on actually in this area on XRP between 2.93 and 3.14. If I open my confluences, then you can see it's quite stacked. So I would expect price to move up to this area, and then we can observe. We got a weekly and a daily here at 2.93, same level. Then in the middle of the box at 3, and then here's the volume at 310-ish. And volume to me is generally most interesting. Like I like volume levels, and the 2 red ones here are volume. So, and what we like to see on XRP is currently you can see the curvature of the chart, right? This is, again, we're going to be looking for a typical impulsive structure now. So we have the messy grind in the beginning. We get the push, and then eventually we look for the grind, and then price to turn around. And then find support. At that moment in time, we will identify areas of support. Retracement, if corrective, look for price to continue, and then on you go. These boxes didn't do so much. So yeah. So the conclusion hasn't changed on XRP. I've never heard on. Is this a crypto thing or is that BCN? Zebek. I don't know if there's a chart with more history, but it's a bit of a tricky 1, 2, 3, 4, 1, 2. Bit of 3-wave possibility here, right? Up, down, up. Where's the wave 4? For an impulse. Probably best to keep an eye on more local timeframes here. Okay, so we do have overlap here again. 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 Okay, so we do have overlap here aga if price can move above, preferably, of course, the higher high, but then we can really talk about, we have a move down, a sideways, and another leg down, right? And then a three-wave corrective structure increases the probabilities to either continue raging / take out the high. I don't really like to count the move to the upside here in too much detail. Yeah, we can get a 5-waver in here. 1, 2, 3, 4, 5. All right, that's then your wave 1, 2. This has to be your 4. So this is then 4, which means 3, 5. 1, 2, 1, 2, couple of lower time frame 1, 2, 3, 4, 5, 4, 5. That's like the way to count it on the lower time frames. To get a 5 in. 5 followed then by 3. Would be nice to take 0.005 though, and then look for price to take out the high at a later stage, which doesn't mean you can't continue the range. But probabilities are higher. This is corrective, which means you keep your eyes open for the high. So of course, I don't have any areas of support. Ooh, what did I just remove? Oh, there you go, my name. So I don't have any areas of support or resistance here on my chart to see if this ended somewhere interesting. I mean, here we have a weekly order block, so at least that's an area of interest. It's also support and resistance quite clearly. So we definitely have some support to the downside. It doesn't make sense to pull a volume profile on the chart that I have here. Volume is going to be down here anyway. So, and then horizontals, there is a daily here, weekly is touched, monthly. Yeah. I mean, the order block would be interesting support if it does come down. Double zigzag is still an option. If you move up and you touch the 0.7, sitting here at 0.0051097, which is basically taking out this high, then the probabilities increase for either a larger sideways correction / take out the high. So those are then the options. Okay, chart is slowing down. And we've covered a couple. Oh wait, Link Legend. I saw Link. Let me look at Link last. And yo, cheese. How you doing, man? Thanks for all your comments as well. I always read them. Your recent one on the short. I saw it. Cheers, cheers, cheese. Hope you're good, sir. Hope you're good. What's going on here? We have support and resistances. This one removed, this one respected. Ooh, lots was touched here. Okay, touched. Probably want to keep it on my chart. Weekly bull. Mm-hmm. This is one option. You do have overlap between... Yeah, there's overlap between this low and that high. Now, even though we might label this as wave 2 price action, and this is then wave 4 price action, it's not preferred to see overlap between wave 2 and 4. It's a strong guideline to not see it happen. So it does lower the probability for a 5 wave down, at least an impulse. Also getting quite close on time because you don't want wave C of a flat to be twice the length. Oh, no, wait. This is compared to wave... Oh, no, never mind. This is 2 compared to 1. What's this? Oh, this is actually the same. Zigzag X and then a flat structure in a wave Y. It's the same result. So look, on Link, price here took out this low one more time. In a bearish scenario, this had to be wave 1, 2, 3, 4, 5, right? Makes sense. The issue is this wave 2, it looks better as like you have a 1, you have a 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, 5, but we never got the additional 4 5s. And counting all of this in my circle, all of this has to be included in a wave 2, right? Including what you see here. So, I mean, it doesn't look great. It's better as a 3-wave-ish structure compared to counting an impulse down here on Link, which would be bullish. So yeah, I mean, this is quite a clear impulse up. This one looks very 3-wavy in a way. I think in the bearish scenario, no, it's still a 3-waver. Yeah. Continuation of the range could be a triangle, but that's a bit early. So no, I mean, Link also, there's nothing really that screams it's very bad. The local move down has overlap, which is important. It lowers the probabilities for an impulse down. You can still get a diagonal, but you need another low. So I'm not really looking at multi-1-2s. So yeah. Not too shabby. Looks fine. Yeah, I can get the WXY in here. W, X, Y. 1, 2. 2 is a flat. 1, 2, 3, whatever. 4. Final leg down, 5. This would result in a wave A, wave B, wave C. Now, ABC can be part of a bigger sideways corrective structure, which is why we do have the WXY, keeping in mind. So then you have W. Right, you need an X, and then Y, whatever. In the end, the conclusion would be similar, is taking out the all-time high at a later stage. So, because probability is higher that the move down is corrective. It's just want to avoid the detail. Yeah. Want to avoid the detail. At the moment, there's no giveaway planned. I mean, the last time we did one has been a while, right? I think when the channel touched 10K, we did like some hoodies and t-shirts and caps. It would be fun to do this for the next milestone. We're getting pretty close to 20K now. Nothing is planned at the moment, but oops. Okay. So, it's time to wrap it up. The weekend is coming. So, of course, on Bitcoin, one generally expects a ranging structure. The analysis on Bitcoin was at the beginning of the live stream. And so far, so good. So, thanks everyone for being here today on Friday. Thanks for spending some time here watching the live stream. And stay in touch. See what the weekend gives. Right, so we will be observing generally during the weekend, of course. I don't really upload stuff as I'm doing other things. But if anything crazy would happen that has not been covered, I might consider going live or doing something. But generally, that's not the case. So let's see what the weekend brings us. Of course, generally a ranging structure. Covered also quite a lot of alts throughout the live stream. ICP, XRP, Tau, Link. One random one, which I forgot the name of. But anyway, you can click through it. I'll try to put some timestamps in. So, Elliott Wave community, anything on gold? I have a gold analysis from like over a year ago, I think, but ask me next time I'm live early in the stream, and I'm happy to have a quick look there. Don't really think much changed on gold though, even though my previous analysis was a long time ago. But enjoy your weekend. Lowry, welcome, by the way. Lowry was the one that found a great indicator on Tradingview, which was the with the boxes. The boxes, what's that? It's like you can use it with order flow, like exo charts and ATH, and what was that indicator? You had to be a premium member of Tradingview to get it, at least nowadays. I forgot it. I forgot the name. I don't use it, so that's why I forgot. But good to see you here, Lowry. Thanks for popping in. But cheers, everyone. Have a great weekend, and we will see each other very soon again.